All right, good evening, ladies and gentlemen. Welcome to the Russell Journal Nightly Edition. My name is Russel Liss. I'd like to thank you all for joining in with us today. I hope I gave us enough time to get the intro in there. All right, ladies and gentlemen. It has been a challenging week. Not a lot of profits to be had, a lot of risk. Did lose a good chunk of the old portfolio this week. Not happy about it. And I have been searching to explain my own incompetence. Okay. Looking for what it is that, and there's so many things that I have done wrong this week. There's so many things. The one thing that I have missed this week is really what the setup is here. What the setup across the whole board is for what's going on. Had I known, I'd have just sat back and waited for it to happen. And now one of the other hazards I'm beginning to notice, if you are watching this, I'm going to seem a lot like watching the weatherman tell you it's raining when you can look outside and see it's raining. Okay. All right. So in the news, we have had this narrative going on that, and I put links to these articles below, so you can just check out the links and see what I'm talking about. All right. We had this call for a massive Santa Claus rally, and I wondered how that could possibly be after the bludgeoning we just took over the 2 weeks previous to this one. And what I didn't see coming was what we talked about yesterday, was the bond sale that they brought in. And what they had to do is keep the stock market pumped up while they sold those bonds and tried to create this sort of balancing act between the bond market and the stock market, okay? Between especially the major indexes like the Dow Jones, the S&P, and the NASDAQ, all right? So really didn't understand this, why they were doing it. I don't understand who at the end of the year is buying at these evaluations, why they're not patient. I mean, I assume that maybe some 401k money is still pouring into there. Just, it's on auto invest. So but like to push it where it's going, it really, really didn't make any sense to just constantly keep seeing all-time highs. I think we hit 79th all-time high or 70th all-time high today for all of the indexes. I think everything but the NASDAQ hit it. So it's been blowing my mind. And every trade that I make has been like, okay, well, this is the move up, and then this is the move down. And you go short on this move down into this weakness, and it looks like good weakness, but then something catches it and just drives it even higher, or continues to drive it higher. And today I finally figured it out. Okay. So what it also surrounds is this narrative. Okay. So in the news today, we've got, or this whole week, we have had major financial institutions like Wells Fargo, Bank of America, Goldman Sachs, financial analysts. They've all said the same thing. They see the S&P going to 5,000. Okay. S&P 500 is going to go to 5,000. And then what's going to happen is later in 2022, we'll see a major market correction. Okay. If there's going to be a major market correction, why the fuck is anybody buying this? If that's coming, right? If we know that's coming, are we all really going to stand around and play hot potato to see who gets screwed? Is that really what we're going to do? Let's go ahead and push it to 5,000 and then watch it crash. Why would we do that? It doesn't make any sense to me. Honestly, this whole narrative is absolutely stupid with what the pushing up of it is. Why are you doing that? Why don't we just hold it? Why don't we just trade it flat? Why don't we put the market in balance down here? We'll just put it in balance and it'll be fine. Okay. Nobody knows how bad that correction is going to be or exactly when it's going to happen. Okay. So what they're going to do, not yet for the chart. Okay. Nobody knows what we're going to do and when that's going to happen. But what they do know is they're not going to be hanging around for it. So what we have going on here is we're looking at these charts and they have all of the hallmarks of a major pump and dump. Okay. So, and we're going to go over to the key statistics here in a minute and talk about this. But this narrative, what they're doing is they're prepping these long-term investors for a major downtrend in the market. That's what this whole narrative is about. Hey, we already saw it coming. We know it's going to be here. Don't freak out. We know your account's going to be in the red, blah, 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 blah. Okay. This is all preparatory for that downturn for the long-term investors. This has nothing to do with us as traders, okay? Other than hopefully we see it coming and we get to buy puts, okay? Now we will go over to the chart and we're going to look at this. I'm going to show you, okay? This is some of the hallmarks of the old pump and dump, okay? These are from my old days before I traded. This is before I traded. Used to trade options back in the day when I traded just straight up penny stocks. So I was doing that. Okay. We see these moves down right along here. We're looking at this at SPY, the S&P 500. And there's a couple of things that I want you to see going into this chart. We're going to look at a few things. Okay. First of all, move down, a lot of volume out. Big green candle in, and then this volume here, these little bars down here on the bottom, this is a minute trickle. It ain't jack. There ain't nothing there. There's nobody there. Okay. That low, tiny little bit of volume. Now they're going to call it a blow up top and this, that, and the other thing. Okay. We're going to go in. Let's go look at the 30-minute now on this. Okay. Look. It's already started. Boom, boom. Right down to the 200. All day, all week long, they have kept these other averages off of the 50. Today, they just let it come down. They didn't even fight it. As a matter of fact, they probably did the selling. Okay. There's two things about this that show me that it's this. In this little rectangle from here to here, this is the pump and dump. This little rectangle from here to here. They kept it in that range. And then if you look at, now I don't know if you can see it, but if you look down here along these volume profile lines, every day you will see one red candle that is always bigger than the rest. Okay. That is them moving out of their positions. This is them offloading their positions. They are cutting bait and running. Okay. And here, this was the final part of it. The final dump. That's what happened. Okay. Apologize. It's warm in here. I needed something to drink. All right. We're going to go to the 5-minute chart now on the SPY. On the 5-minute, high of the day, 479.90. Okay, now this is the part where I say it's raining. I needed to catch this right here towards the end of the close. Now that we're here, it's all too obvious. 50 pulls back below the 200. The move out is down. The volume is huge on the way out. There it is. There's the dump. It's starting. Now, let's go back to, we're going to drop one more. Fibonacci. This time we're going to do the Fibonacci retracement. Sorry, guys, give me 1 second. I was trying to get this set up. I just thought we should probably do this. Okay. Okay, so this is our Fibonacci retracement. Oh, that should probably go back up to there, somewhere in there. See there? Okay, so I'm not going to show you how this works. Fibonacci is usually fairly useless, other than to give you some sort of idea. We did confirm yesterday that Fibonacci was in play on the chart, so that was like fine. Again, you can see we're holding up above the top of it. I'm going to get rid of some of these other lines. Some of the confusion. Okay. Pull this back. Drag this down. Be able to move this chart over. Okay. You can see it's not perfect. It's not exact, which is funny. They use Fibonacci and then they're like, it doesn't have to be exact, you know, but that was kind of the point of the golden ratio. Okay, now that we have our height, okay, you can see right here, kind of the bottom of this candle here to the top of that candle right there. See this? We're rejecting. Tomorrow, looking for 472 tomorrow. We break below 472, and it'll be the next move down, 468. So we should get some $4 moves here. Move to the downside. It has the hallmarks of the pump and dump in that it has no volume, it has no rhyme, no reason, no logic. Nobody knows where this money's coming from or who's buying it. Nobody's talking about taking larger positions here. Everything on TV is something else. Everybody else is talking about something else. And then if you look right here, okay, I can get rid of this for a minute. Well, we didn't really need it. See this? This is the 50-day moving average. Look at how far extended off of it you are. This is the 50-day down here. 62 to 72. You're $10 off your 50-day moving average. It's a long way, guys. Okay, it's got to come back. That's the other thing. It's got to come back to that average. And notice, let's go here. Notice here, it pretty much always comes back to the 50. So it's going to come back. It's the extension. There it is. Probably get 462s for pretty cheap tomorrow. All right. That's SPY. Let's go over here. IWM. Again, IWM, same difference. See that same big move up on the daily? Go to the 1 minute. There's the bleed coming out of the back. QQQ, same thing. QQQ's been rough all day. They've been fighting. They've been trying to stay up. Apple's been trying to keep them alive. Apple couldn't fight the Fed, though. Look at that. Straight down. Okay. Yeah. Them's the breaks, homies. That's we're sitting here looking at a straight pump and dump. Blowing my mind. Stop sharing. So that is what's happening there is we have been subjugated to a pump and dump, the sporadic actions of the market, the no follow through into a lot of these moves. If I had seen it coming, I probably would have had a much better week. I did not see it. I did not understand it. I didn't understand it as a Santa rally. And my real mistake was that I didn't understand. I knew I didn't understand, and yet I continued to trade. I can't allow myself to do that anymore. You know, I would say if there's any one thing about it, because it means I'm breaking my own rules. I'm not respecting my risk. Okay. If I don't know what I'm risking or why I'm risking it, then I can't respect it. The other thing is, how can I honestly say I have a trade plan if I'm planning without, if I'm doing this without knowing what's going on, you know? And that's really what this comes down to. Okay. You have to plan your trades, and you have to trade your plan, and you have to respect your risk. I'd like to thank you guys all for tuning in with me. Again, my name is Russel Liss for the Russell Journal Nightly Edition, and look forward to seeing you guys next year, huh?